This is an article that's just actually in Kitco, and I'll post a link on this. But the thing is, I think a lot of people are wondering what's going to happen in 2012. I mean, is there going to be deflation or inflation? And from what I've always read, is that deflation precedes hyperinflation or very strong inflation. And I don't know if we're going to go into hyperinflation. I don't quite buy that scenario. But going into a very strong inflation that may be defined as a lower scale of hyperinflation, maybe you want to put it that way. Um, that I think is the what's most likely scenario, and it's not going to be something like Zimbabwe inflation. But right now, everybody's like, people bought gold, people bought silver, probably like thinking, I think the hardcore people are holding on, but they got their second doubts as to how long it's going to take. I think it's going to turn around a lot faster than people expect. This was a very interesting article. I'm just going to hit the highlights on it, and you can read it. But there's a lot of different things out there that point to the same type of thing. And judging you by how people are thinking right now, well, they're fearful. And I'm going to get straight into this, but I'm going to use a little common sense with this because if you bought metals, you don't have a long wait. I don't think so. This goes on, it says an economy is not controlled by monetary policy of governments or central banks. It's controlled by people. People produce more. That's what makes the economy run, not paper. We all know this. QE did not work. Quantitative easing did not work because fear has taken center stage. Primarily, what's going on with fear? People are not buying homes. The real estate market and the construction market, indirectly or directly, drive 50% of the entire economy. So when that's down, forget about it. I mean, it really knocks everything down. So, and this is saying people are not buying homes because it's hard to catch a falling knife. They are scared of depreciation. They're not secure in their jobs. Now, right now, I mean, some people I remember I saw were buying a lot of properties in 2008 because they figured, oh, it's not going to go lower. Well, they're wrong. But right now, maybe it will go a little lower. But is it going to go 50% lower? No. People were buying, generally speaking, the 99% is not very smart. That's why they're 90% or the 99%, and that's usually what happens. Real estate may not be the absolute best investment right now, but it's still not a bad investment. I think it's going to go up. Maybe you're going to have to hold it a little while, but usually when you buy real estate, it's not one of those buy, flip in a year type things anyway. So, I just want to comment a little further on that, but that's very true. Right now, people are afraid to buy real estate, and it's cheap as it's ever been because they see this curve going down and they go by history, recent history. People spend fiat when they're sure in their job security and they have faith that the future will be secure. You can see this all the time. The case of depending on if it's a male or female, a guy might go out and blow a lot of money on drinking or whatever they do. I don't do that, but I mean, they might, females, whatever. I mean, people just have fun. When they got money, they blow it. So that's usually what happens. So right now, there's a lot of fear going on, and a lot of people are not, they're hoarding cash, including people that have lots of money. They're hoarding cash. They're staying mostly in cash. They think they're safe in cash. Big mistake. But you can't tell them nothing. You can't tell them nothing. Believe me, you can't. If you tell them to buy gold and silver, most of these people look at you like you're high. So I say, screw them. That's the way to look at it. When you gas an economy with quantitative easing, you can never be sure of the result. And that's something like Mark Farber says, Him I like. He'll tell you straight up what's going on. He says for a fact he's not sure because he's not God, and nobody knows for a fact. When they start talking like they know too much, they definitely don't. But he'll say that it creates bubbles. He's not sure where the bubble will be. But when you do quantitative easing to gas in an economy, you never can be sure of the result. And you know, the last time there was a bubble in the real estate market. Now, the next bubble, who knows where it's going to go? It all depends on where the big hot money flows to and a lot of capital flows into. Before hyperinflation, there is always a period of asset deflation in a fiat currency rally. Remember that postulate, because that's exactly what we're going through right now, you know. And I want to point this out because before hyperinflation or high inflation, I don't think we're going into like Zimbabwe hyperinflation. Bernanke is not that stupid, and they're not going to totally trash the United States out. They're not that stupid. And there's always a period of asset deflation in fiat currency rally. And right now, people have the money right now. I just want to hoard the money. They're afraid to spend it. You know, they feel they're safe. They feel they're safe with fiat money. So what happens is it all kind of flows back into gold. I kind of disagree with this pyramid because I think on the bottom this can not only just be gold, it could be anything of real value, which could be the commodities, it could be the real estate, it could be any hard asset. You know, they put real estate way the heck up here, but you know, the problem with gold is it doesn't generate value, whereas in real estate you can you can always rent it or lease it and that type of thing. There's producing businesses that need real estate to do their operations on, whether it's manufacturing or it's in the service sector or whatever. It's for rentals for storefronts or rentals for people to live in. Real estate still generates money, so it's a hard asset. Commodities definitely are consumed all the time. So I kind of disagree with this pyramid, but a lot of money is going to flow back into commodities, gold, silver, and real estate. And he goes into something else. It was another part about this, and he talks about people abandoned gold many years ago when they got comfortable with paper, and that psychology is definitely there in people's minds, left and right. I mean, I know, it's an obvious fact. You know, people buy the gold and silver, and that's been said 8 million times. But really, when you go around to people, and people that are very astute in business, and they have all these different types of securities invested in different places, they are so used to looking at paper. They look at gold, and it's like, what is this yellow rock? You know, they just don't associate it with as having some kind of value unless you assign a paper value to it, because what they're interested in is the fiat money, and that's just how people are trained to think. So there's a hell of a lot of people not going into gold, but I don't think when the people get scared of the fiat dollars that they're necessarily, I think that's one area that's going to go up. There's going to be a lot of areas that are going to go up, and it's anything with real physical tangible wealth, real physical tangible utilitarian value that people need. It could be oil, it could be copper for buildings or electrification or whatever. It could be farms, farmland, agricultural products. It could be a lot of different things. So I think that's what's going to happen. And these things right now are all showing deflation. Even agriculture's been showing some deflation as of 2011. That surprised me, but it's going to change. It's going to change. The oversupply of fiat money has already happened. The government sees that spending has not picked up, so they suspect deflation. And if you look at the recent statistics of November 2011 that just came out, inflation was expected to be like 0.1% or something for the month, but it was actually at zero, according to the government numbers. The government sees that spending has not picked up, so they suspect deflation. But America is awash in liquidity, and it is true. There's a lot of people with a lot of wealth that are just holding on to their money. And yeah, it's just that people are hanging in there on the fiat as a store of value. And And it goes on, soon people will discover that holding fiat is dangerous. They'll buy anything of value, chairs, lamps. Well, that's like the smaller people. But you'll see some of the bigger people try to get into other things. Anything that can hold value. And it's all better than holding paper since the purchase item can be traded later. So, and he also talks about the velocity of money. When the velocity of money is high, that's basically when there's a lot of people trying to get rid of the fiat. They're always trading in and out. They're trading in and out all the time. Right now, the velocity of money is very low. They are holding on to that cash, and it's really nothing but a bunch of paper. But they've been trained. The paper's got intrinsic value. So I'm telling you, that's really what the problem is. I mean, I'm kind of saying the same thing over that everybody else says. But, you're looking at these people that have money. You don't walk into a store someplace with some hunks of silver and get a better value because you got silver in your pocket. It doesn't work like that. And I'm not trying to knock the silver here. I'm not saying that. But quite obviously, that's exactly how it's working right now in this present minute. So people are just hoarding cash. But there is a lot of cash out there, and it's working like building up behind a dam. And when that dam breaks, you're going to see some serious inflation. So right now, I don't know exactly when this is going to occur, but I don't think it's that far off. It's just that when you're sitting here waiting for grass to grow, you don't know what the hell is going to happen. You're kind of like suspecting, is it going to be deflationary for all of 2012? I don't think so. The majority of people right now are having second doubts. I don't have second doubts. It's a basic principle that deflation precedes hyperinflation or extreme inflation. And I think we're not going into Zimbabwe inflation. You rule that out. I think that's pretty much a given. That's not going to happen. This was written actually in 2003. I've seen articles about this guy before, but I'll post a link on this. But he talks about what was going on in Argentina. And in the 2 years leading up to the massive 2002 devaluation in Argentina, smart, well-informed Argentinian money knew well the two-dear peso-dollar relationship would not maintain its unholy alliance. It was strangling the economy. Consequently, smart, well-informed Argentine money began selling its publicly owned stock. That's probably what's going on in the United States and Europe. During this period, the Argentine Dow equivalent Merval plummeted nearly 70% from 650 to 200. Now, I mean, I've seen things where Paul Drockton was saying a lot of people were selling those stocks. Insider trading was going on. People were dumping stocks. I don't know. Maybe they are. And maybe they're hoarding cash. Just things don't happen sometimes overnight. And the common people pretty much think something's got to happen within a month or two or a week or whatever. So it doesn't happen that fast. But it may be true. But this is what happened in the Argentine market. So when it was pretty flat, and then all of a sudden in '01 it dropped off like, from about, I think that's over 500, then it dropped down to about 200 inside of a year. Then all of a sudden it shot up to 800. So, I mean, that could be something that's going to happen, in the United States and Europe. I don't know. You'd almost think more like in Europe. But I'm not sure if that's going to happen in every single stock there is. Right now, I'm holding mainly in commodities. I still think that mainly I'm a little less in oil. I kind of bought it back a little cheaper. I didn't buy it back as cheap as I thought I could have. I should have, but it's still better than just holding forever. And I think that's going to be the first one to go up because of tensions in the Middle East. That's my bet. But that might be an exception to the other parts of the market. But I think that what happened here in Argentina may be a pretty good scenario of what's going to happen in the United States and Europe. You'll see some of the stocks all slide down before they start going. Then they're going to go into quantitative easing left and right. You're going to pump everything back up, and they're going to go right through the roof. So I mean, even Mark Farber says you're better off. He said it actually as an emphasis at the end of one of his speeches. He said that he wanted to add that you're probably better off in equities than you are holding cash. And I could see why. Because, you might see this, but if you get scared and sell it here, you're screwed, And that's what some people do. Just hang on, just hang on. If you're in good, solid companies, hang on. I don't think everything in paper is going to go down like this Lindsey Williams says, I mean, sometimes I wonder about that guy. But there's going to be a downward turn, and there'll be an upward turn, a very hard upward turn. It says, in my considered opinion, the U.S. is traversing the same ruinous road as Argentina in the last 2 years before taking its bitter medicine to cure the ills of lost exports. Now, this happened in Argentina because Brazil started devaluing their currency and they were the biggest trading partner. So all of a sudden, Argentinians were buying stuff up cheap because their currency was worth a lot and they're living high in a hog for a while. And then all of a sudden it overtook them, trade imbalance, and that's exactly what's going on in the United States and China. Not that the United States can't produce goods, but right now, I mean, it doesn't look that way at all because, people have gotten into this mode, buy something cheap from China. That's not going to happen like that. They got to go back to the way it was at least 50 years ago. And you're talking about, this is back in 2003, but it's a great lesson. To cure the U.S. in economic malady, its two-dear currency must be devalued. He's talking about the dollar index went from 120 to 95 back in 2003. He says it needs to go down to 85 or 80. Well, right now it went up to 80. It's not going to cure anything, to tell you the truth, because the Americans, for the most part, have gotten dumb and lazier as generations went by. Not all of them, but a hell of a lot of them. I mean, I've seen the Japanese work in person, the Koreans work in person, and I've seen them how they do construction over there, and I've seen how people do construction over here. I mean, not that there's not some real super good people over here, real total crackerjacks, as they used to say, and they could really, do a hell of a lot better job than anybody in Japan or Korea, but for the largely, in most cases, it's not normally that way, and that is the problem in a nutshell. And but I couldn't knock anybody in construction, because if you're in construction or something like that, if you're actually a producer of some raw goods that are needed, you're doing something good for the economy, It's just that we got a whole pile of these bureaucratic financial wizards on the top that know how to screw people over, and I'm very much aware of this type of stuff. Now, my case, I kind of get into a lot of different areas, mainly into accounting, but I know how to do a lot of other things too. Most people in these offices don't know anything, but people. This was something else, it talks about, let me get back to this other article again. It talks about what we need to do and what's going on right now. He talks about the example of the dying soldier and Saving Private Ryan. And that's basically kind of like what the United States is. They keep giving him morphine, and he finally dies because... this was on the Post, but he talks about that's the way he sees the American economy. The economy is like a dying soldier in the movie. The morphine QE 1, 2, 3, and 4 or 5 or whatever says will actually kill the economy, but the economy is going to die anyway, so there's nothing to lose. It's temporary comfort. And Bernanke is doing this. Actually, Bernanke is not a bad guy. I mean, he's doing QE because he is lessening the discomfort caused by the economic downturn. But the real economic upturn is true productivity. Yeah, it isn't the government can't do anything about it. It's the people. It's the 99%. That's my whole beef about this Occupy Wall Street. So what? Say the 1% went away. You know, big deal. I mean, I know there's always going to be a 1% because it's a definition. But if all these people were out there, say he just threw them all kinds of money, it wouldn't matter because you actually have to produce something. That's the problem. And till people wake up to that fact, it's not going to change. So, but I think really the main point I'm saying here is don't worry too much about the metals going down or deflation and all this kind of garbage, because I'm seeing a lot of stories about this. The metals are going to go up a lot. I don't know exactly pinpoint when, but I don't think it's going to be a long wait. And if you look a little closer at what happened here in Argentina, this is in 2001. Consumer price inflation fell below zero, right? And then what happened? They had deflation and they went right up to the roof, right? These are the red lines, the producer prices, and the black line is the consumer prices. So it's going to throw you a curveball, and all of a sudden you're going to see the metals go way the hell up. Now me, I'm not waiting for no $1,000 an ounce. I mean, if that thing goes up to $400 or $500 an ounce, I'll pick on somebody else because I think he's kind of high too. Big Swear, I'll sell it to him. So I don't know, but we're going to see the metals fly up pretty soon. It's not going to be a seriously long wait.